Georgia from Service Pro.
1 2. Can you guys hear me? Okay. Can you guys hear me? I think we fixed the problem of the audio. I think today you can hear me loud and clear. Okay. So what are we gonna be doing today? So we will have our first lesson for our mentorship program. I know that we had initially scheduled this to be done on the 9th, and today is on the 12th. We had so many challenges. Okay, but the main reason why we delayed it was because we were busy working on our website, and now you can now go on our website. So this is the our website link, which is www.dcfxtrading dcfxtrading in small caps .com. So we now have a website where you can buy products and you can order services. So we now have our own website. Let me take you there. We now have our website where you guys can purchase different products. So this is our website, so you can play around. During the course of the mentorship program, I will tell you how to navigate, because I've seen so many people are struggling to navigate and through our website. So I'll make sure that during the course of the mentorship program, I will show you guys how you can navigate through this this website. Okay, so let's get down to today's business. So if you're watching us for the first time, just make sure you subscribe, and let's share this live to as many people as possible, and make sure you like this video, guys. It goes a long way in making sure that this content can reach a lot of people. So make sure you like, make sure you subscribe, make sure you comment. Let's engage in conversation, ask questions as we'll be having this mentorship. I'll be closely monitoring the chart as we'll be having this lesson. So we want this to be more interactive. So this is a perfect opportunity for you to share your thoughts, ask questions as we'll be having this mentorship lesson. So what are we going to be talking about today? Okay, in today's lesson, we're going to be looking at market structure. So I have designed this mentorship program in such a way that it's in a way that allows you to have a solid foundation on how financial markets operate. So our first lesson is going to be on market structure. So as you know, as a trader, before you execute a trade or you enter the market, there are certain number of questions that you have to ask yourself. The first question is that you need to know the prevailing trend. You need to do your market analysis. You need to know the prevailing trend. That's the first question that you have to ask yourself. Are we in an uptrend? Are we in a downtrend? Or is the market consolidating? That's why this is the first lesson that we're going to be having, because it answers that question. What is the prevailing trend in that particular financial market? So that's what we're going to be tackling. We're going to be looking at market structure. So what are you going to be learning in this mentorship program? So in this mentorship program, we're going to learn why market structure matters. Why is it important to know knowledge about market structure? Then we'll also learn about breakout structure, BOS. What is the meaning of BOS, breakout structure? What does it mean? Then we'll also look at change of character, CHOCH. What is the meaning of a change of character? What does it mean? What does it imply? When we have a change of character, what is going to likely take place? Then we'll also look at the types of market structures. We have different types of market structures. So we'll also look at the bearish, the bullish, the bearish, and a range in market. How do these market operate? Who will be dominating in this particular market? So basically, this mentorship program will be answering these questions. Okay, so let's look at the introduction. So I would like to welcome you guys to this mentorship program. This is the first step towards mastering the art of trading. Yes, we are here to master the art of trading. So our first course is going to be on market structure. We want to understand market structure. Understanding the market structure is the foundation for successful trading. In this module, it is designed to equip you with the knowledge and skill needed to interpret price action and make informed trading decisions. So basically that's what we want to do. We want to equip you guys with the necessary knowledge and skill so that you're in a position to interpret price movement. So basically that's what we want to do, and you'll be in a position to make informed trading decisions. Okay, when you look at market structure, as you know that 90%, almost 90% of the traders go on different brokers' page. They will tell you this. About 90% of the people who are involved in Forex trading, they lose their money. One of the reasons why most traders lose their money is because they don't have knowledge about market structure. You go into a bullish market and you're looking for selling opportunities, or you go into a bearish market and you're looking for what? For buying opportunities. This is the main reason why most traders lose their money. As you know, most people are normally talking about the fact that the trend is your friend. So we want to analyze and have an understanding of how we can do our trend analysis. Okay, so basically that's what we're going to be looking at. Okay, so the first topic that we're going to be answering is the different types of market structure. So the first one, so we have three market structures. The first one is a bullish trend. Some people call it an uptrend. And we also have what we call a bearish trend, and some people call it an uptrend. Then we also have a ranging market or a consolidating market. So these are the three market structures that we have, the three types. So a market, or when you look at a market, for example, with volatility 75, when you're looking at this, so it can be in different phases. It can be in different market phases where the market is consolidating, or it can be trending. So when a market is trending, it can be in an uptrend or a downtrend. So we want to understand how this works. So I'm going to start with a bullish trend. Okay, feel free, if I'm moving very fast, please just let me know in the comment section. Let me know in the comment section if I'm moving very fast. Okay, there are no questions. Loud and clear. Thank you so much, Maso, for acknowledging that you can hear us loud and clear. So let's just continue. Types of market structure were on a bullish trend. So if you look at this, we say the bullish trend is also called an uptrend. Okay, a bullish trend is also called an uptrend. If you look at the word bullish, it was derived from the word bull, bulls. And if you look at the actual bull, when a bull is attacking or killing its prey, when it's fighting, it normally uses its horns to throw the prey up. So what does it mean? If you look at a bull, when it's fighting, it uses its horn to throw the prey up. So a bullish trend moves up because of that. A bullish trend moves up. So when I started trading, I used to think that when we talk about an uptrend, price will be moving in a straight line. This is what I used to think. I used to think that when we talk about an uptrend, price will just move in a straight line like this. But there are different phases during an uptrend. So let's quickly look at the characteristics of an uptrend. So when we look at an uptrend, the characteristics is that in an uptrend, there will be a series of higher highs and higher lows. Higher highs and higher lows. This defines an uptrend. The structure indicates that the buyers are in control. So in an uptrend, we can clearly see that the buyers are in control of that particular market. Why? They will be consistently creating new higher highs and respecting. When we say respecting, I'll explain. When we say respecting higher lows, it means that it will not go beyond the previous low. So in a bullish trend, traders will be looking for what? For pullbacks, and they enter the market after the pullback or a correctional wave, that's when they join into the what? Into the what? Impulsion or impulsive wave. So we have different phases that we have in an uptrend. We have different phases that we have in an uptrend. Okay, let's look at the theoretical representation of a bullish trend. So when we look at a bullish trend, so here we have a low, then we have a high. After the high, the price dropped down and created a high low. So the HL stands for higher low. Then the HH stands for higher high. So there will be a series of higher low and higher highs and higher lows, higher highs and higher lows. So the price will be moving in such a way. Some people call this the breathing pattern of the market, the breathing pattern where it breathes in and it breathes out. So the market will never move in a straight line. It will make what we call impulsive move from this higher low to this higher high. We have what we call an impulsion or an impulsive wave. This is where the money is when we are in an uptrend. This is the movement that you want to catch when we are in a bullish trend. Then there will be phases from the higher high to the higher low, where the price will make what we call a pullback or a correctional wave. So we now know that this is how an uptrend operates. So in an uptrend, still on that point, in an uptrend, the bulls are in control, or the buyers are in control. They will be pushing the price upwards, breaking the structure. I'm going to explain what does it mean. BOS, what does it mean? They will be breaking the structure, creating new higher highs. And when the price makes a pullback, it mustn't go beyond the previous high low. Let's go to the chart and let me explain what I'm trying to say here. So if we go on VIX 150, I have some illustrations. We are still on theory. We are still on theory. We are still on theory. Let me just do this. I want to minimize this. Yes. So we are talking about an uptrend or a bullish trend. And I have something that will help us understand the theory. So in an uptrend, the buyers are in control. Why? Because they will respect the previous high low. When they respect when there's a pullback, when price makes a pullback at this particular phase, it will not go beyond this previous high low, and the price will break the structure and create a new higher high. So what does BOS mean? What does break of structure mean? So I'm going to explain what BOS means. Okay, so break of structure occurs when the market breaks above the previous high in an uptrend or below a previous low in a downtrend. So we can also have BOS in a downtrend. It signifies a potential continuation of the current trend and is a key point for identifying trading opportunity. So what break of structure means is this. One, it just signifies when we are in an uptrend. We are talking about an uptrend. The BOS, the break of structure, signifies a continuation of a trend. When the buyers are in control, they should be in a position to break the previous high and create a new higher high. So this one is a new higher high. So BOS signifies a continuation of a trend. So again, on BOS, we only need a wick of a candle to go beyond the previous high. So a wick of a candle, if a wick of a candle goes beyond this point, we now have what we call a BOS. If price just moves down, even if it closes below, we still have what we call BOS. So these are the two key things that you need to know. One, when we talk about a breakout structure, we're looking at a continuation of the prevailing trend. So in a bullish trend, we're looking at a situation where the bullish trend is there is a continuation of that trend, a bullish trend. Then again, even a wick or a body of a candle, if it goes beyond the previous high, it signifies that we are in a bullish trend. There's a continuation of an uptrend. So those are the two key things that you need to have. So for our graphical representation, this is what we mean. In a bullish trend, there's a continuation of that bullish trend. In a downtrend, you can see clearly that the price will continuously move down and create a new lower low. So let me first of all explain theoretically about these different market phrases. Then we go to the market and we'll do a practical application of this theory that we are acquiring. Okay, then number 2, we're going to be looking at a bearish trend. I hope we are together. If we are together, just write in the comment that we are together. Just write in the comment that we are together, we are moving together. If you are left behind, if you have a question, you are also free to ask. So just write in the comment that it's loud and clear, or it's clear, or we are together. Just write in the comment section that we are moving together, or it's clear. So we're gonna go, we are still on the theoretical aspect of these market structures. So let's go to the next one, which is the bearish trend. We have explained the characteristics of a bullish trend, break of structure. We also explained that. Now we're going to talk about the next market structure, which is the bearish trend. So if you look at the word bearish, it came from the word bear. So when you look at the bear, they normally step on their prey. When they want to kill or when they are fighting, they normally stamp on their prey. So that means this market, a bearish trend, it moves down. Sometimes this bearish trend can also be called a downtrend. So a bearish trend is a downtrend. So what are the characteristics of a bearish trend? A bearish trend, the key features of a bearish trend is that there will be lower highs and lower lows. Lower highs, so LH stands for lower high, and LL stands for lower lows. So the structure signifies that there are bears or there are sellers who are dominating the market, and they are driving the price downwards. So as traders, how do we enter that particular market? We wait for a pullback. When price makes a correctional wave, then we can join into this impulsion or this downward movement or this bearish momentum. Okay, so how does it look? So we have a high, and then price made a low. Then here we had a lower high. LL stands for lower high, and then price will continuously break the structure. We also have a break of structure as there is a continuation of the downtrend, and price will then make a lower high. So in a downtrend or in a bearish trend, the sellers are in control, and they break the structure and will continuously make new lower lows. And when price makes a pullback, it mustn't go beyond the previous high low. Let's go to the chart and let me explain what I mean by that. Okay, so here if you look at this chart, this is a bearish trend, this is a downtrend. So here we have a high and here we have a low. So this is a low, this is a low. In price will make a pullback, which we call a correctional wave or a pullback, and then the sellers will drive the price downwards and break the previous low and create a new lower low here. And this will continue to happen as price will continue to move downwards. So these are the characteristics of what? Of a downtrend. There is a lower high and lower lows, and the price there will be a break of structures. Price will continuously create new lows. So basically this is how a downtrend looks like. And we have these phases from a lower high to a lower low. We have what we call an impulsive move. In Elliott wave theory, it talks about impulsive moves and correctional moves, but you'll be using the word waves, impulsive waves and correctional waves. So this is how a downtrend looks like. Okay, it's fine. So this is a bearish trend. Let's talk about a sideway market. Some people like to use the word a range in market. Let's talk about a range in market. Let's talk about a range in market or a consolidating market. So a range in market or a consolidating market occurs when the price moves sideways within a defined range. Okay, basically, when we talked about a bullish trend, the price was moving up. When we talked about a bearish trend, the price was moving down. So in a sideway market or a ranging market, the price there is no direction. Price is not moving up or is not moving down. Price is just consolidating within a range. Like here, price will just move up and comes down, moves up, come down. So there will be series of highs and series of lows. So here you can't say the price is moving up or the price is moving down. Price is just moving up and down. Sometimes this range, price can range with a direction. It can range with an upward direction or it can range with a downward direction. So you'll see in most cases, it will not be like this. Sometimes it ranges with a direction, sometimes it ranges with no direction. Okay, so these are more advanced concepts. But for now, to make it simple, so that if you're a beginner trader, just know that there are times when price just moves up and down and it doesn't have a clear direction. So in this particular market, if you're a beginner trader, just know that if you see that the price is having such a structure, there is no clear direction. It's a ranging market. And what should you do as a trader? You should not wait for a breakout. Wait for a breakout. Whenever the price is ranging, don't trade. Wait for a breakout. Why is it advised that you shouldn't trade? Because sometimes you might say, okay, the price is moving up and probably you want to buy here. Because in most cases, if you're starting to trade, you want to wait for the initial movement. And in most cases, you'd see these movements late. And you want to buy here because you've seen that price is moving up. And when you buy here, you are in a profit for some time, then immediately price starts to drop. And now you're faced with a huge loss. And now when you see, okay, I'm in a loss, okay, let me move out and start to sell. When you want to sell here, price will then move up again and you end up in a loss. So it's very difficult to trade in a ranging market. But with advanced trading skills and strategies, it's possible for you to anticipate a bounce when price reaches this particular movement. That's when we'll be talking about support and resistance, or we'll make use of demand and supply, or even order block theory, or some different entry model that you can make use of to know that this is going to hold and you can trade during this. But as a beginner trader, you need to just wait for price to break out. When it breaks out, there will be a violent breakout. So this ranging market, when price ranges, just know that a breakout, a massive movement is going to occur. And for your own information, 70 to 80% of the time, in most cases, in most markets, you would see that the price is always ranging. And this is the reason why most traders lose their money, because they are trading in a ranging market. So you need to wait for price to make a breakout, then you join into the trend. Okay, I think with the theory, I think we need to only explain what do we mean when we talk about a change of character. Okay, looking at a change of character, let's talk about the theory a little bit. Change of character. When we talk about a change of character, this marks the transition from one market phase to another. For example, we're moving from an uptrend to a downtrend, or vice versa. It is identified by a shift in market structure, a shift. Sometimes, in most cases, some people use the word shift in market structure, where you're moving from a bearish trend to a bullish trend. Okay, so there is a violation probably of an uptrend or of a downtrend. This will result in a change of character. Okay, so theoretically it looks like this. So assuming that price here during this phase, it was moving down, it was in a downtrend, we can see a series of lower low and lower highs, and then price was able to make a lower low. Then from there price made we are here. Let me just use a different color here. Okay, I want to change the color for this. Let me just use red. Okay, so we're in a downtrend and price was able to create this lower low, and then it pushed upwards, created a lower high, and then there was a break of structure here. Break of structures, price created a new lower low. And then price in a downtrend must respect the previous lower high. But in this case, it didn't respect this level. It was able to trade and push the price upwards here, and we created a new higher high. So there's violation of a downtrend. So what this signifies is that there is a possibility that the price is now moving from a downtrend to an uptrend. So here, this is how it is like when price makes this movement. And how does this differ from a break of structure? With a break of structure, a change of character, you need the body of a candle that it must close above this level. We need the body of a candle to close above this level, and then price will then come back and create a new high low, and then we are now in the birth of a what, of an uptrend, and then price will now break the structure, creating higher highs and high low. So you see, when there is a change of character, there is a change in the direction of the market. Price is now moving from a downtrend to an uptrend. Okay, the same applies when we are talking about in a downtrend. Here we had the what? Here we had the what? We had a higher high and a higher low, and then price broke the structure here. We had a break of structure and created a higher high. And then there was a drop here as the sellers are now taking control from the buyers. They were able to push the price beyond the previous high low, creating a new lower low. This just shows that there's now a shift in power. The sellers are now taking power from the buyers, and then from there we now have a lower high, and then the birth of a downtrend as price will now break the structure and create new lower lows. So a change of character just signifies that there is now a shift in market structure, or a shift from in a market where the sellers were dominating the market to or from a situation where the sellers or the buyers were dominating, and then the sellers are now stepping into the market and taking control from the sellers. So this is how it differs. But the most important thing that you have to know is this: when we talk about a change of character, we need the body of a candle to close beyond this previous low when we're in an uptrend, and we need the body of a candle to close above the previous lower high when we are in a downtrend. I will explain theoretically. I will explain when we now look at the practical application of these things. Okay, so let's go to a chart. Which chart are we going to be analyzing? Okay, I'm going to look at VIX 75. Let's see if VIX 75 1S will explain. Then, before we go to the practical application of this information, before we go there, which market can we look at? Okay, there's one thing that is very important. Which time frame do we analyze, do we do our market analysis? Which time frame do we do our market analysis? So it's high time frames. High time frames, you need to do this when you are looking at high time frames. So for example, you can look at this when you are looking at the H4, the daily time frame, the weekly time frame. That's when you can do your market structure analysis, so that you will not be deceived. The moment that you go to lower time frames, there are high chances that you can be deceived. You end up thinking maybe from a 15-minute time frame, even if the market is bullish, there are times when price is making a bearish movement. So you would see on your 50-minute time frame, price will make lower lows, lower highs, lower lows, lower highs, until it reaches a point where it will start moving upwards. So you'll be confused because on your 50-minute time frame, the price is bearish. But if you go to a high time frame, the price might be bullish, and you can be easily caught into this trap. So you need to do your market analysis from higher time frames. Okay, H4 daily, I think those were fine. So we're going to be looking at I'm going to start at this particular area. We want to look at VIX 75. So we're going to start from I think the 9th of June, and we start to do our market analysis. Okay, I'm going to start around here. So I normally want to use the path. This is what we call the path. And from here, we can see price pushed upwards. Let me use black. From here, price moved upwards here. So we're gonna spend a lot of time doing practical application of what we're talking about, so that this becomes easy for you guys to understand. So here price made, pushed upwards, then dropped, creating a higher low. Then from there, then the pullback, there are pullbacks that are valid and some are not valid. So what validates a correct pullback? Because it's important. Why is it important for you to know a valid pullback? It is important because there are times someone might say, okay, here we had a pullback, but we only have one red candle. This will not be accurate. Why? We need at least, when we are in a bullish trend, we need at least 3 consecutive red candles that will close below each other for that level to be validated as a what? As a pullback or a correctional wave. Why? Because it will mark out our high low. Because here, if you're going to mark out this one and say this is a pullback here and price moves upwards, when price closes below this level, you now say there's a change of character, which is wrong. So with me, I normally use at least 3 consecutive red candles when we are in an uptrend. For example, here we had 1, 2, 3, 4, a lot of red candles moving down. So we had a push upwards and price created a higher high, then it dropped, then price pushed upwards. So this level now, if I'm gonna mark out the high for this particular level here, we had a higher high here. I need to know if price was able to trade above this level and create a higher high. Yes. So at this particular level, we had a valid break of structure, and we also had a valid higher low and a higher high, and price broke the structure at this level and created a higher high. Then we also had a continuation and price dropped down. And what is important is that when you are in an uptrend, price must not go beyond the previous high low, and price created a okay. I hope you guys can hear me nicely. Okay, let's just mark out our zone and label everything. So at this particular level here, we had a break of structure, we had a BOS. So I do this. Those who normally follow me, I do this before I start doing anything. I do my market analysis or my trend analysis here, or my market structure here. I want to know what's the prevailing trend on that particular market. So here with the higher high, so I'm gonna use HH with the higher high, and I'm gonna use red. Okay, then from there price dropped down and created a high low. So here with the high low, and from there the buyers were in control. Price pushed upwards, went it was able to push beyond the previous high low, and it created a new higher high. Here we had a break of structure. So we have a break of a higher high, a new higher high, and then price dropped down and respected the previous high low. And now from this point, the buyers were able to push the price beyond the previous high. So this was our previous high at this particular level here. BOS as the price broke the structure and created a new higher high. So we have price here creating a new higher high at this particular level here. Then from there, when price dropped, it's very important that if you want to know there's a continuation of an uptrend, or are we still in an uptrend, you need to mark out the previous high low. When price made a pullback here at this level, price was not able to go beyond this level. So we're still in an uptrend during this phase. When we had a candle that closed below this level, we're not looking at the week. We're not looking at the week. At this particular level here, I'm going to mark out the low. We're not looking at the week. We're going to ignore the week. We want the body of a candle, like what happened at this phase. Then here with a change of character. So this is now signifying that this market, although it was dominated by buyers, there is now a likelihood that the price is now moving downwards. Here, price made a lower high. So this is a lower high. We had a lower high here. at this level, and then price dropped down and created a lower low. So this is the birth of a downtrend. We're now in a downtrend, and then price pushed upwards. So the lowest point was this one. Price pushed upwards. Okay, if you come here, there was a little bit of movement. That's why I said you need to stick to your higher time frame. So at this particular level, we at this particular level, this is our lower low, and then price pushed upwards to create a new lower high. So here we had a lower high, and then from that particular level we had the break of structure. Is now price was now continuing to move to drop downwards. So here we had a break of structure, and price created a new lower low. So if you do this, you will never be caught in a trap. You will never be caught in a trap. Price made this movement. We had a lower low here, and then from there price pushed upwards here, created respecting this previous level here. So we had a lower high at this particular level here, and then from there, if you look here where we had a lower low at this particular level here, let me just make sure that price did not go beyond this previous level here. So this was also showing okay, at this particular level here, price was trading beyond this structure. So we had a lower high here. I'm gonna mark out with blue, and a lower low. So as long as price is trading within this range where we have a lower low and a lower high, we are still in a downtrend. There is no violation of what? Of this movement. Unless price goes beyond this particular level, we know that there is a possibility that price is about to move down. So when we had a break of structure, it was when price was able to trade below this level, which took place at this level here. So we had a BOS at this particular level. BOS, break of structure, continuation of the downtrend, and this was our what? So why is it I didn't mark this particular lower high? Why is that I didn't mark this particular lower high? Because this lower high didn't come from a point where we had a break of structure. So our correct lower high is this particular level, and then from there price then moved down and created a new lower low here. This is the lower low, break of structure. Then from there, what do we have? Okay, as long as price didn't close above this lower high, we were still in a downtrend. During this phase, we're still in a downtrend. And here you can see we had a wick that went above here. Some people talk about liquidated swept, and then it closed below that level. We don't consider this as a change of character. We only wait for price to break beyond this particular level. When we had a candle that closes above here at this particular level, we now had a change of character. So if I mark out this level, come on. Okay. When we had a candle that closed above here, that's when we had a change of character. So the change of character is here. We had a change of character here. So we're now in an uptrend, and from there price dropped down and created. So here, if you look here, the characters are now changing, or the characteristics are now changing. Here we had a higher high. So we're now in the higher high, and then price respected this particular level, and then it dropped down, created a new higher low. So you do this, you will never be caught in a wrong place. Higher low. So this marks out the birth of the uptrend. So here we had a now higher high, higher low. We know that we are in an uptrend. Then here we had a break of structure. Price moved upwards. BOS. So that means there's now continuation of a downtrend. And you see, when we had a pullback after price created a new higher high here, then price dropped. It didn't go beyond this previous high low. indicating that there is continuation of a downtrend. And then from there, we also had a break of structure. We also had a break of structure at this particular level. Break of structure. As price went above this level, and then from there, there was a price then dropped down. So here we had a candle. If you look closely, we had a candle that closed above this level. So the break of structure occurred here. We had a candle that closed above this. We had a break of structure. So that means this level was our high low. Then there was a pullback, and then we had a candle. Like what I was saying, you can't say this is a change of character because we only had a candle, a week of a candle that closed below this level. Our high low remains this one, and then from there price pushed upwards, and here we had a break of structure here. Continuation of a bullish trend. So we are moving in an uptrend. We're in an uptrend now, and then from there price created a new higher high. Like we said, here we can't consider this as a valid. So if you're not sure, if you're in a, for example, you're in an H4, you're not sure if this is a valid pullback, just go to the next time frame and do your analysis from there. Okay, so from there, this was our higher high. Price created a higher high and then dropped, came back to this particular level and gave us a higher low. So we are here. So if you see, this is the structure. We had a higher high, higher low, and here we had a break of structure. From here we had a break of structure as price continued to move upwards. So we had a BOS here. Price made a BOS and indicating that there's a continuation of the bullish trend and the buyers are in control of that particular market. So here price made a higher high, and then from there, if you see, what then happened is this. From there we had price closing below the previous high low. We want the body of a candle. Tomorrow we'll be having a mentorship where we'll be talking more about candlesticks so that you understand and interpret what these candlesticks mean. They have meaning. Candlesticks have meaning, and you can trade and use candlesticks for entries. Okay, here we had a change of character. So at this particular level, when price closed below this previous high low, we had a change of character, indicating that we are now in a downtrend. From there, price started to drop down. So we are in a downtrend. If I'm going to do my market analysis here, we are in a downtrend in volatility 75-1S. You see here, it's more like the same thing that we had. So here, if you go on the H4, this becomes this level, and here everything is correct. So what then happened is that after creating this high, then price dropped down and created a lower low. So in volatility 75, which is the derived synthetic indices index, price is in a downtrend. So what is currently happening is this: price has made there's a change of character. We're in a downtrend. So what we're currently waiting for is for price to make a lower high, and then price starts dropping down. So this lesson only focuses on doing this trend analysis. Then when we talk about entries, so that means in this particular market, I'm going to be looking for selling opportunities. So in this particular market, if I'm going to be trading this, what am I going to be looking for? Okay, this is not part of the lesson. So I'm going to look for where is this strong down movement started. It started at this particular level. So I'm going to mark this particular level here. And there's a possibility that price can push and reach this particular level. From this level, then we continue moving downwards, something like this. And we can also talk about the Quasimodo pattern, where this higher high, and here we created a higher high. At the same time, price was constantly creating lower lows. So this was a low and it created a lower low. So price created a higher high at the same time creating a lower low. So this is what we call a Quasimodo. And using the Quasimodo entry level here, we now mark this, and this becomes our KM level. So you see, it starts from understanding the market structure. So in this particular market, yes, I'm going to wait for this to play out. Price comes to this particular level, and I'll look for my entry level here. So this can be a signal for those who like signals. So I'm gonna mark this previous high, low, and I'll mark this this particular level. This become my QM level. So for the sake of those who already know about this and they're wondering, okay, I know these things, so how does this help me to get an entry? So we'll talk about chart patterns, and we'll also talk about candlesticks, and where we'll be talking about this advanced chart pattern, which is called the quasi-model level. So here I've marked my QM level. Let me just do this. This is my QM level. So I'm waiting for price to come back to this level, and then I'll execute my trade. But where is this coming from? It's coming from the fact that I have knowledge about market structure. I've seen that the buyers have taken control. The sellers have taken control from the buyers. So what I'm now waiting for, I'm now waiting for price to come to this particular level here and give us what we call a lower high, and then from there I might target this particular level here, and then it becomes easy. So when you master this market structure, you know what you're looking for, you know what is going to take place. So this market, there is a likelihood that price will push and come to this QM level, and then it will drop and come to this particular level. Why this particular level? We have a fair value gap here, and we also have this left part of the quasi-model level, and it's also aligning with this supply zone. It's also aligned with this. So there are a lot of factors that are supporting the fact that we should sell at this particular level. One, we have a supply zone. It is also aligned with the KM level. Then this is the origin of this downward movement. So there's a possibility that price might push and come back to this particular level. Okay, guys. Thank you so much for your time. Before I go, I want to answer questions. I want to answer questions. If you have any question that you have pertaining what we are discussing, I'm gonna go to the charts now. And do we get recordings? Yes. So when we are doing our mentorship programs, you'll be getting videos. You'll also be getting this PDF. I'm gonna post this PDF that I was using on our website. I'm gonna post it on our website. So if you want, you can go on our website. It's gonna be there, and you can get this for free. It's gonna be free. The PDF that I was using for this market structure is gonna be free. Go on our website. Just give me probably 2 hours. I'll post it on our website. Then you can download it there. So whenever I give a strategy, you want those PDFs. The PDFs are gonna be free on our website. You just go and download it and go through. This video is gonna be there again on YouTube. I'm gonna post it on YouTube. When I'm done, I'll post it on YouTube. What else? Let me go through the question. Clay is saying, hello guys, thanks for the great work. Thank you, Mr. Clay. Mr. Clay. The volume is low. Hey, I'm struggling with that. I've been trying to work on that, but I think today some acknowledge that they could hear us. I was loud and clear. Charles Ndlovu is saying, very informative. Please, another chart example. Yo, you want another chart example? Do you think, guys, it's worth it? Do we have to analyze another one? I'm late, but I love it. So it's safe to buy VIX 75. Okay, that's why we said you can't buy now. Why am I saying you can't buy now? Are we in an uptrend or we are in a downtrend? Guys, just know this. Before you execute a trade, there are questions that you have to ask yourself. The first question is, what is the prevailing trend? So we said we're doing this. The battery is low. We're doing this so that you know when to buy and when to sell. So Boss Masole is asking, are we going to buy? Why should you buy when there's a change of character? When now there's a shift of power in this particular market, the sellers are more strong. There's a possibility that when price reaches this level, where we have a supply zone here, price can just reverse and start moving down. So when you buy, you're exposing yourself to a lot of risk. Wait for price at least to come to this particular level here and then look for selling opportunities. So in VIX 75, if you want to lose your money, look for buying opportunities. Yes, there are some people with good and advanced skills who can buy in this particular market because they can see that, okay, price is now making a correctional wave. But the best approach, if you want to trade volatility 75 1S, is for you to wait for this to play out, which is one virtue that most traders do not have, which is patience. Patiently wait for price to push up, come to your level, get a signal here using candlestick pattern that the price is now ready to move down, then execute your trade. So you can't buy now. Wait for price to push up, come to this particular level, give you again a signal. I believe trading is a way where in trading, basically, money moves from those who are impatient to those who are patient. That's what I believe in trading. So if you can't wait for price to push upwards and wait for price to give you an indication, use the candlestick patterns or chart patterns at this particular zone when we are now looking for entries. Tomorrow we're going to be live again, where I'll be teaching you guys about candlestick patterns. Why do we have to learn about candlestick patterns? So that you can master different entry models. Candlesticks, they are there to give us good entries. So tomorrow we'll learn about market structure. Then on Saturday we are having our first mentorship class. We are having our first mentorship. So if you still on there on that particular note, let me just help you guys to how you can navigate. So when you go to our website, for example, let's just do this together. If I go here, okay, I'm now on my website. There's a link in the description. You click on that link, it will take you to this home page. So if you click here, these areas here, this particular area, if you click here again, all these things, they are fully functioning. We have icons here. Let's start with the most important things. We have here the home. If you click on the home, it will take you to this particular page here where there's an introduction of what we talk about, what we offer. So we focus on Forex, cryptocurrencies, gold, derivatives, synthetic indices. Basically, that's what we will be looking, and we'll be providing you guys with expert tools and training. That's this site is all about. It's about providing you guys with tools. So we've only uploaded our spike detectors, and they come in different forms. So someone was asking, okay, if I buy a Boom 1000 spike detector, am I going to be able to use it in Boom 300? You can't use it in Boom 300 because these markets have different behavior. If you look at Boom 300, those who have been trading for these markets, it's totally different from Boom 1000. The spikes the frequencies in which these spikes are different, and the size of these spikes are different. So these different indices have different behavior. So a spike detector for Boom 1000 cannot be used in Boom 1000. So if you click it, for example, if you want to purchase this, if you click on this asset, it will take you to this particular page here. Then you can add to your cart, but here there's a brief description of how this indicator works. You can go through this here, and there's also a video. So there's also a video here which will show you how these spike detectors operate. So there are pictures and there are also these videos on this particular website. You can see it will show you how this Boom 1000 spike detector works. So there's a video there. Then if you click on add chart, it will take you to your cart here where you can now proceed to check out, and you then purchase this particular indicator. But if I come to my cart here, view cart, okay, we now have different payment method here. For example, if I want to purchase this spike detector, you see I'm now here. We now have PayPal, and I think we recently added other offline payments. Let me see, check out here. Some people were struggling. They were asking, how do we make payments? Okay, so we have PayPal. Let me see. Other payment methods do we? Okay, I think we're in the process of adding other payment method. I think very soon there's going to be Skrill. There's going to be, for South African, you need to listen very careful. For South African clients or customers, there is a possibility that you can make your EFT. You can also make your bank transfer, your bank transfer or your bank payment. So we have only added that, but it's under offline payments. It's under offline payments. But for now, everyone around the world, you can now make use of. I think very soon, I think in an hour's time, I will add Skrill. We are also going to add cryptocurrency, where you can make use of your BTC, your USDT payments. Then we're also going to be adding Skrill cryptocurrency. And for those who are in Africa, maybe you can also make use of Mukuru. You can also make use of what else? Western Union. I think those are the payment methods that we're gonna be adding. I think the site is not yet updated, but we added this, I think, in before we started this live. So these are some of the payment. This is how you do it. So if you want to look at the products that we have, you just come here on products. But very soon I'm gonna make some changes. I want it to be specific so that if you want indicators, you just click on indicators. If you want trading robots, you click on trading robots. But for now, on products, we only have indicators, and these are some of the products that we have. Then there's a package where you can purchase these spike detectors. Once there's a package where you can purchase this spike detector. If you come down here, where is it? And here, still on products, I'm still yet to we're still correcting this. We still have, you can also look at our copy trading services, and the information about these copy trading services is also there. Then we also have our signals. You can also pay for our signals on the website. Then we also have our mentorship program, like that we said is gonna be starting on Saturday. Then you can also talk. We have coding mentorship and we have trading mentorship. Coding is where you want to learn how to create your indicators, where you want to learn how to create your robots, your trading robots. We have a coding mentorship and the prices are there. Then if you now want any of our services, we have a particular area. You just come here and you click on services. Then it will take you straight to our services page where we have the following services. So currently we have mentorship, trading mentorship. It's $200. You can book it. Then so it will tell you the dates. So every month, be it coding, be it trading mentorship, we'll be having 2 sessions. One that will begin mid-month and the one that will begin at the beginning of the month. Okay, so that's why we said Saturday we have our first trading and coding mentorship. Then we also have our VIP signals. You can also purchase them. It's just $30. Some will be asking, is it lifetime? What's the duration for these premium signals, and what signals, financial instruments are you going to be giving signals for? So it's $30 per month for 1 month, 30 days. Then the signals we focus on cryptocurrency, Forex. We are on Forex. We are only focusing on Euro USD. On commodities, we are focusing on gold. Then we also have cryptocurrency. We'll be giving BTC mostly, BTC USD. Then we also have derived synthetic indices, where we'll be giving signals on boom and crash, volatility indices, step, jump, drift shift indices, those ones. Then we also have our copy trading services. All the information is there. Just click on it and book these services, and then you can also get in touch. Then we also have this dot. You can also click on this dot and you can chat with us. You can also chat with us on this particular so we have our live chat here where you can also chat with us and send us messages. Then if you go on our menu again, still on home, these icons are working. These icons that you see, if you want to connect us through WhatsApp, you can do the same. If you want to connect through Telegram, Instagram, YouTube, you can also connect and join our various communities. Okay, then for our contact details, you just go on contact us. If you go on contact us, it will take you to this page. You know, so we normally operate from 6 a.m. to 8 p.m. every day. So we are talking about Central African time. then this is the address, this is the contact details, then this is my email, and these icons that you see here work. Yeah, these icons, they also work. So I'll do a video, a separate video, where I'll show you guys how to navigate through our website. So what is the name of our website? It's www.dcfxtrading.com. www.dcfxtrading.com. So we now have a website. You can buy some of the assets. So we're going to be updating our trading robots, I think, and more indicators for Forex and for cryptocurrencies and for gold. We're going to be uploading them on this particular website. Guys, okay, let me go through the questions. Someone was requesting that we need to look at another asset. Okay, let me go through the questions and check. Give us 20 to 30 live trading with those spike detectors and see how perfect they are. We are willing to buy. Okay, we have videos. I think 2 or 3 weeks ago we did some live trading. There are so many videos. If you check, I once went live about 3 times. If you go on my YouTube channel, this channel, go on live sessions. There were sessions where I was trading live with the spike detectors. Just go and check them. But it's a good suggestions. Suggestion is clear. We're gonna be doing this live session with the spike detectors. For now, we're just promoting our mentorship, which is going to start on Saturday. So after this, I think probably next week we'll be doing live trading sessions with these spike detectors. Thank you so much for your suggestions. I think for today we are done. If there are no questions, guys, I think we should call it a day. Please visit our website, dcfxtrading.com, and look at the good. It took me some time. I think it took me about 2 weeks just working on this website. So guys, please feel free. Very soon, I think today, by the end of the day, we'll be loading a lot of some free stuff. We have a lot of free materials, trading to indicators, robots, trading information that we're gonna be uploading on our website, and some strategies. We're gonna also add a section where we'll be posting some strategies, some PDF for different strategies, and some basic trading knowledge. We'll also be posting them on this site. Okay guys, thank you so much for your time. It's bye bye for now.